Staking or lending crypto assets in order to create high returns or rewards in the form of additional cryptocurrencies is known as yield farming. Thanks to new breakthroughs like liquidity mining, this inventive yet dangerous and unpredictable application of decentralized finance, DeFi, has exploded into popularity recently. Yield farming is currently the most important development driver in the still developing DeFi sector, helping it grow from $500 million in the market capitalization to $10 billion by 2020. Hello everyone and welcome back to the Metaverse Economy channel. In this video, I'm going to discuss everything about what is yield farming in crypto. How do you buy it and how it adds up as an asset? Keep watching. Don't forget to subscribe if you want to catch more videos like this. Let's start with the main topic of this video. Yield farming is a method of generating interest on your crypto coin in the same way that you would collect interest on any other type of money in your savings account. Yield farming, like depositing money in a bank, is taking your coins for a period of time in exchange for interest or other benefits, such as more cryptocurrency. What is yield farming and how does it work? Let's see how yield farming works with Bitcoin. Earning an annual percentage yield on bank deposits is a Bitcoin counterpart of yield farming. When investors engage in yield farming, the value of their Bitcoin increases over time. Yield farming, unlike APY with the bank, is not a passive activity. Yield farming is at the most basic level, a method of generating fees by lending cryptocurrencies via smart contracts. Investors must comprehend the complicated methods behind the process to be effective yield farmers. It's not as straightforward as lending money out once to get a return on cryptocurrencies. Rather, investors must continually shift their cryptocurrencies around. The Bitcoin industry is still in its infancy, and yield farming is even more so. Many yield farmers don't share their strategies with one another because more yield farmers means more competition, which means lower total earnings. Yield farming techniques in brief encourages liquidity providers, LPs, to stake or lock up their crypto assets in a smart contract-based liquidity pool. A share of transaction fees, interest from lenders, or a governance token can all be used as incentives. These results are expressed as a percentage yield on a yearly basis, APY. The value of the issued returns decreases as more investors add funds to the relevant liquidity pool. The majority of yield farmers initially staked well-known stablecoins such as USDT, DAI, and USDC. The most popular DeFi protocols, on the other hand, currently run on the Ethereum network and offer governance tokens for liquidity mining. In exchange for providing liquidity to decentralized exchanges, tokens are farmed in these liquidity pools, DEXs. When a yield farming participant wins token incentives as additional income, this is known as liquidity mining, and it gained popularity once compounding began releasing the rising comp, its governance token, to its platform members. Most yield farming protocols now award governance to tokens to liquidity providers, which can be exchanged for both centralized and decentralized exchanges like Binance and Uniswap. 10 of the most popular yield farming methodologies. To maximize their returns on their staked cash, yield farmers will frequently use a number of DeFi systems. These systems provide a variety of incentivized lending and liquidity pool borrowing options. Here are 10 of the most common yield farming techniques. Aave. This is a non-custodial open-source decentralized lending and borrowing protocol that allows users to borrow assets and receive compound interest for lending in the form of the Aave, formerly Lend token. As of August 2021, Aave has the highest TVL locked out of all DeFi protocols, at about $21 billion. On Aave, users can earn up to 15% APR for lending. Compounding. It's a money market for lending and borrowing assets, where users can earn the governance token comp as well as an algorithmically adjusted compound interest rate. To ensure the highest level of security, everything is audited and reviewed. As of August 2021, total supply is about $16 billion, with APYs ranging from 0.21% to 3%. Curve Finance is a decentralized exchange, DEX, that uses a unique market-making algorithm to allow users and other decentralized protocols to swap stablecoins with cheap fees and little slippage. With approximately $9.7 billion in TVL secured, it is the largest DEX in terms of TVL. The base APY can be as high as 10%, while the incentives APY can be as high as 40%. Stablecoin pools are generally safer because their peg value does not depreciate. Uniswap is a popular DEX and AMM that allows users to swap practically any ERC20 token pair without the involvement of a middleman. Liquidity providers must invest 50-50 on both sides of the liquidity pool in order to earn a share of transaction fees and the Uni governance token. Uniswap v3, the most recent version, is a growing protocol ecosystem with over 200 integrations. As of August 2021, V2 has a TVL of $5 billion and V3 has a TVL of over $2 billion. InstaDApp is the world's most advanced platform for maximizing DeFi's potential. Users may manage to expand their DeFi portfolios, while developers can use their platform to create DeFi infrastructure. Over $9.4 billion has been invested in InstaDApp as of August 2021. SushiSwap is a fork of Uniswap that sparked a massive uproar in the community during their liquidity move. With multi-chain AMM, loan and leverage markets, on-chain mini dApps, and a launchpad, it's now a DeFi ecosystem. As of August 2021, TVL on the platform is worth $3.55 billion. PancakeSwap is a Binance Smart Chain BSC-based DEX for exchanging BEP20 tokens. Users of PancakeSwap trade against a liquidity pool using an automated market marker (AMM) approach. With nearly $4.9 billion clocked as of August 2021, it has the greatest TVL among BSC protocols. With the lottery, Team Combat, and NFT collectibles, it focuses primarily on gamification features. The annual percentage yield (API) can be as high as 400%. Venus Protocol is an algorithmic-based money market system on the Binance Smart Chain that tends to add lending and credit-based systems to the platform. Users provide collateral to the network and earn an annual percentage yield (APY) for lending, while borrowers pay interest. Venus is unique in that it can use market collateral not only to borrow other assets but also to mint synthetic stablecoins with over-collateralized positions that defend the protocol. A basket of cryptocurrencies back these fake stablecoins. As of 2021, TVL has a market capitalization of about $3.3 billion. Balancer is a trading platform and an automated portfolio manager. Its liquidity methodology is unique in that it allows for flexible staking. It is not necessary for lenders to supply liquidity to both pools in an identical amount. Liquidity providers can instead construct unique liquidity pools with different token ratios. As of August 2021, about $1.8 billion has been committed. Yearn.finance is a decentralized automated aggregation protocol that allows yield producers to use different loan protocols such as Aave and Compound to get the best yield. Yearn.finance employs rebiasing to maximize profit by algorithmically locating the most profitable yield farming services. Yearn.finance made headlines in 2020 when the value of its governance token, YFI, soared to almost $40,000 at one point. Yearn users can earn up to 80% APY, and the protocol has a total value of $3.4 billion. Farming techniques for high yields. Hacking is always a possibility, particularly on small decentralized finance systems, because yield farming is still in its infancy. The risks are substantial as the creases in the system are smoothed out. Yield farming allows cryptocurrency investors to take on less risk by borrowing and lending with Bitcoin and Ethereum, the two most popular cryptocurrencies. Creating an account on the exchange for trading. Only follow the recommendations of reputable Bitcoin sites. Collaborating with the cryptocurrency-focused firm to gain access to cryptocurrency experts. Understanding market fluctuations and mentally preparing for them. Farming for yield is approached as a long-term commitment. Yield farming is a complicated process that exposes both borrowers and lenders to great financial risk. It is typically subject to significant Ethereum gas expenses, and it is only worthwhile if thousands of dollars in money are provided. When markets are turbulent, users face an increased risk of temporary loss and price slippage. Yield farming, in particular, is vulnerable to hacking and fraud because of potential flaws in the protocol's smart contracts. Due to the intense competition between protocols, where time is of the importance and new contracts and features are frequently inspected or even copied from predecessors or competitors, code problems might occur. The YAM protocol, which generated over $400 million in days before a fatal issue was discovered, and Harvest.finance, which lost over $20 million in a liquidity hack in October 2020, are two examples of vulnerabilities that caused significant financial losses. DeFi protocols are permissionless and reliant on a number of programs to work properly. If any of these underlying applications are exploited or fail to function as planned, it might have a negative influence on the entire ecosystem of applications, resulting in a permanent loss of the investor's cash. Before beginning yield farming, investors should examine the following factors. Do they have a thorough understanding of the cryptocurrency they're looking to lend or borrow? Is the currency stable enough to keep its value constant throughout the time? Are the revenues sufficient to offset the loss if the cryptocurrency loses value? Is it disastrous to lose their total financial protocol if they lose a lot of money through yield farming? Share your thoughts in the comment section below. Thanks for watching, and if you find this video useful, please hit the like button and don't forget to subscribe.